So let's dive into today's session. Before we start, please understand this is not an investment, financial, or tax advice. We are all here to learn from each other, and that's the intent. So take everything that you hear or see in this discussion as a learning experience and not as a professional advice. So let me sip a little bit of coffee. So before I start, one thing that inspired me this week, and I want to talk about every week. So last week we talked about a quote, but this week I actually attended uh, a online session, or you would say a live stream with this gentleman. Anyone, any idea who this person is? Okay, so he's Mr. Dan Ariely. He is a professor of psychology in Duke University, and he's also a chief behavior officer for Lemonade. So my intent was to understand more about Lemonade as a company, because I mean that's a from my perspective that's an insurance company, but I want you to know how is Lemonade different. So that was my intent to attend and hear his thoughts, what makes Lemonade different. But what inspired me was what Morris has mentioned. He shaves funny, and this is indeed. Then I googled him and I realized it's not only now. I could see many photographs of him in this. So, but the inspiration that I took from it is more than what he has to talk about Lemonade. But I don't care what world thinks of me. Many times we are bound by we. I would say unnecessarily sometimes put boundaries around what we think we can do or cannot do based on some of the norms that have been predefined in society. Or even if not, we just think that, hey, it's not appropriate for me to go out of a way and try something new. So when I was watching him, I'm like, there's something odd. And then he realized why it is odd. But then that got me thinking, he doesn't care. So if a if a person at that level doesn't care, who am I, an individual, investor, or a person working in a company should care about what if I want to change something in me, or what if I want to change how I want to work on, what I want to work on. What would other people think about that? You know, hey, I've been working in this particular industry for 15 years now. I want to change it because I'm interested in that. Other people might think that you are stupid. So what? Okay, so that's an inspiration I got from Mr. Dan. Is there are some things which might look out of a norm, but if it's not illegal, it's not immoral, it's not harming anyone, go ahead and do it. Try it out. Get that satisfaction. Uh, I know each one of us has. Uh, y- no, this is not a meme. So this is a real pic. So I actually took um, a screenshot of him while I was watching this live stream. It was a sort of an interview um, during which I was watching. So it was funny. You know, many of us would have moments in our life where we would want to do something, but are held back with some inhibitions around what the other person might be thinking about it. In most cases, the other persons don't even give a damn about what you want to do. It's just that our own thoughts inhibit us. So that's what inspired me for this week. I don't know how he goes around in the real world. I have not seen him in the real world, but I have seen. Then when I googled him, I saw his picture in some conference in the same way. Mr. Dan 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 Airely, or I might be misspelling his second name. Uh, he's uh, he's at Duke University. Next one, let's look at what happened in the markets. Um, no secret, not great. Depending on which side we were trading on, most of us are long, so probably not the best week. But I want to read through something which I found, which had some good explanation of the market summary. Yes, Dan, a really well-known behavioral psychologist and economist. Yes, that's the person. Thank you, Peter. It was great to listen him talking about Lemonade as a company and what they focus in Lemonade. Not that I have become a bull or I've changed my opinion about Lemonade yet, but it's good to hear different perspectives. That makes us a better investor. So, quick summary: S&P 500 biggest weekly decline in a month, and Nasdaq Tech worst drop since October. So these were the couple of headlines, but I on one website I found some good explanation for it. So bear with me. I'm going to read through it. First, I thought I would just summarize in a few words, but then I may not be able to do justice with it. There's a lot of good information in this, so it was helpful. So I thought I'll go through it with you guys. So consumer discretionary shares were particularly weak, dragged lower in part by steep decline in automakers Tesla, while a drop in Apple shares weighed on the information technology sector. Energy stocks outperformed as oil prices rose. The shift led value stocks to handily outperform their growth counterparts, leaving them well ahead for year-to-date period. Much of the pullback could be attributed to fear among investors that higher inflation and bond yields could cause an exodus from equities back into fixed income instruments. This is something that we talked about in past few sessions, keeping an eye on 10-year interest, um, which was ticking higher and higher from zero point 0.7 to 0.9, 1.1. On Thursday, it went all the way to 1.6. Then it cooled down a little bit on Friday. Consumer inflation data released earlier in this month surprised on the downside, but producer prices reported at mid-month rose 1.3% in January, much more than consensus expectations and large increase in data going back to 2009. Producer prices increases means inflation is on the way. Inflation has also been pronounced in the housing sector, and Tuesday brought news that home prices has increased 10.1% in December from a year before. Relatedly, lumber futures have reached record highs, while copper prices are at their highest levels in a decade. Jobless claims. This week's strong economic signals also seem to feed inflation worries. Weekly jobless claims hit their lowest level, 730,000 in 3 months, and recorded biggest decline since August. Personal incomes jumped 10.1%, thanks largely to the payments from coronavirus relief package passed in December. It was the largest gain since April following the passage of first pandemic relief package. The manufacturing sector remained in solid shape with core capital goods order rising 0.5%. Fears that stronger growth and rising inflation would lead to Federal Reserve to begin removing monetary stimulus sooner than expected abated on Wednesday. when Fed Chair Jerome Powell confirmed policymakers' dovish stance in testimony before Congress. Stocks surged briefly after Powell's comments, emphasizing that inflation remains soft and does not show signs of likely experiencing very large or persistent increases later this year. Powell said that it may take more than 3 years to reach the central bank's inflation goals. Inflation worries, stronger than expected economic data, technical factors, weak auction results combined to put the yields on the benchmark 10-year US Treasury note to around 1.61 on Thursday afternoon, its highest level in over a year. The broad municipal bond market also suffered through most of the week as tax-exempt yields continue to follow the Treasury yields upwards. So net, little concern around inflation. The 10-year Treasury yield going up, it means there could be a chance that money will move out from the risky assets, which are generally growth assets, onto lower risk fixed income asset, which could be bonds. Till now, bonds were not at all attractive because they were not paying anything. But now, if those are paying 1.45%, I think that's where it ended on Friday. That's why markets are green on Friday because 10-year note fell down a little bit. So if those treasury note will give 1.5%, maybe some capital will be deployed in that. So that's one reason why we saw a lot of volatility in especially the growth sector. Number two, all these growth companies need a lot of money to continue growing and higher the cost of capital, higher the treasury rate, higher will be the cost of capital. So their cost of growth will become more expensive. Number three, in many valuation models where these analysts define and find out what the stock valuation should be, a critical factor that goes into it is a risk-free rate, which is generally treasury rates. So if that risk-free rate is increasing, those make the stocks less attractive. The stocks that were looking a week ago valued okay value, I wouldn't say fairly valued. They were little on expensive side, especially the growth stocks, have now suddenly become more expensive because the risk-free rate has also increased. So I think these 3-4 factors combined together led to what we saw in the markets this week. Jerome Powell came and told he's not worried about inflation, and the Fed will continue to have their dovish stance, means continue to keep buying bonds. But we'll have to see. I think in some point of a time, market also thought maybe Fed does not probably have lost control on the yield. And if that happens, I think we would see probably more of what we saw the previous week. Vijay says Fed has lost control over rates. They are trying to figure out. Um, right now, they are still controlling it, but I don't know how long can they control it. We were also helped by the European Central Bank. They also did a little bit of a QE. So we were helped by that as well. But let's see how long Fed can deliberately keep the rates low and keep pumping the money. Refi mortgage rates are up. Yeah, because they follow 10-year benchmark. Is there a way to figure out incremental inflows into bond market, that money that moved from equity into bonds? I don't know of, but it'll be interesting to see that number. I'm sure this probably will be available in terms of equity inflows, outflows, and bonds inflows and outflows. So we may try to find out. I don't know from top of my head if where to get this information. I never try to look into that. A question from Sudhir. Generally, bonds are hedged to stocks, but this week everything was sold. Don't they supposed to go reverse to each other? This is not even this week. So the general 60-40 rule of, hey, keep 60% in stocks, 40% in bonds, because they move inverse to each other. I haven't seen that happening when the things are bad. In good times, maybe, but in the bad times, every asset class gets correlated. Gold is supposed to be hedged. Gold had their worst week, this previous week. So in a bad times, like happened during March 2020, all the assets class are correlated to each other. Everything went down except dollar, I would say. Markets were down, bonds were down, gold was down. Same thing we saw even this previous week. What is bad now? At that time, yes, it was bad due to big unknown. Right now, the only, I would say, when I say bad, the investors right now are thinking in terms of inflation concerns. That's what is concerning right now. Okay, so Peter provided a link for on the fund flows. Thanks, Peter. Okay. So even if inflation rises, there are some sectors that will benefit. We'll look at those. Let's look at the sector specific. Let me increase this a little bit. So while the broader market was down, there were some sectors that still benefited from it. If inflation rises, that will benefit the financial sectors. So we saw financial sectors perform better last week, from 8.6 to 11.7% year to date. The sectors that were worst hit were consumer staples and technology. So technology sector fell almost 5% last week, as well as the utilities. So these were the worst hit sectors for the last week. Inflations go high, the more the interest rate that financial services can charge on the loans that they disburse, better for them. That's why we saw XLF, which is financial ETF, worked out better. JP Morgan hit their all-time high. Goldman Sachs hit all-time high. Bank of America did really well. And hell, even Wells Fargo has done great in past, I would say, 6-7 weeks, ever since there has been a lot of money moving from growth into these value plays. Okay, so Sudhir, I answered your question in terms of financials. Financials actually went up last week. So markets were red overall, but let's look at a little bit of a history. This was a good chart, and I like looking at it. This put things into perspective, right? We talk about marks are red, my portfolio is hurting, and whatnot. But if you go back and expand our time horizon, it's not that bad. So let's look at this chart, which dates back to 1929 all the way to 2020. It shows a daily historical performance of S&P 500 index. The ones which we are looking in blue are the bull periods. The one which is in yellow are the bear market periods. So what we are generally concerned about is, how do I protect myself from this period? Should I get out when the stocks move into this yellow range? And it always happens. There will be periods when the market will turn bearish. I don't know Whether it will turn bearish this year or not, I think nobody knows. But we are always concerned about it, and it hurts more than the joy that we gain when the markets are bullish or go high. So the only lesson that I want us to take is that in order to avoid the pain from these, make sure that we are not losing the happiness from these. So it does give me some perspective around there will be bear markets. Markets don't go in one direction always, but then there will, or again, there will be bull market somewhere. So before you decide to pull out your money, and I had some folks reached out to me and asking me, what do you think about market? Do you think it's gonna go worse or it's gonna go better in next few months? I don't know. What will market do in a short term? Nobody knows. So the concern was, should we pull out completely from the markets, move into cash? In that, if you do that, you risk not riding out these waves. You risk sitting on the sidelines. So just a perspective, think around it. Right now, the this week market fell down, but so what? As long as if you don't need the money for next 2 years, I would say minimum. How do I care? I don't need that money for 2 years anyway. Another chart which gives us similar perspective and is around annual returns and the intra-year declines. We are what? Just in February. It's only 8 weeks into this year. So there have been years which were worse than what we are seeing in this week, but overall year performance have still been great. Look at this. 34% market was down 34% in intra-year, somewhere in 80s, and still ended up 2% positive. The most recent example in is 2020. It was down 34%, but year end S&P was up 16%. So despite average intra-year drops of 14.3%, annual returns are positive in 31 out of 41 years. So before you pull out, uh, just move beyond this week. Go and look at where was your portfolio maybe a year ago. Is it still better than that? And why do I care what happens in 1 week? I see a question. Should we move out from growth to value? Or I always look at a balanced portfolio, and I don't think there is any harm in moving out from growth to value. So have positions in both growth as well as value. Growth is generally more volatile. Growth has outperformed value for last 12 years. If you have been in value only for 12 years, those were the horrible, horrible years. But now the cycle may be turning. So won't harm in taking some positions in the value place, financials, energy, materials, um, move over to mid caps. I see. So if it took about 16 years for .com all-time high of QQQ to recover 2016. Interested to know your thoughts on that one. Yeah, so one particular, especially the tech sector, if you look at a sector specific, QQQ took 16 years to recover. I mean, I agree with that, but again, the question is, if you had invested at the height of .com, and then you are waiting to recover from that crash had taken you 16 years, provided all your holdings were in the same sector. That is why I don't like timing the market, Asif. I stay invested throughout. And if I were to add it, I keep adding throughout because I don't know where the top is and where the bottom is. But it's not a good situation if you are invested in at the top of the market. So for me, timing the market is exercise in futility. And then we will end up into these situations wherein I bought it at the top and you say markets have recovered. I haven't recovered my investment yet. That's all I have to say about all that. So let's look at crypto market. Things would have changed by the time started took this screenshot. So let's go and look at the latest one. Except number 3, nothing else stands out to me. This volatility in these assets market is common. If you're invested in this market, be prepared for 10, 20 to 30% volatility at any point of a time. If we cannot stomach that amount of volatility, then we have no business of being in this market. I know some of us freaked out saying what's happening to Bitcoin. It was 58,000, now it's down to 47,000. That's okay. It's what, 20% drop? This asset is known to drop way more throughout this life cycle than just 20%. Now, only thing that stood out to me this week was we got a new leader on the victory stand, which is ADA Cardano. I don't think I ever seen Cardano at number in top 3. I just jumped onto top 3, I think on Friday yesterday. So that's a new leader. We talked about Cardano some time ago, and maybe if time permits, I can cover a little more detail about their plan. So they have had a good team. Just that market is now catching up with their software development that they have been doing it. So this team had a multi-year plan, started in way back in 2013, 2014 or 15, and recall, but they're very slowly and steadily developing the software and the ecosystem. Now those things are coming into fruition with release with the newer releases. That's why market is now recognizing it. Hey, maybe we should look at Cardano and value it a little more than what they were valued, till now. Another interesting chart from Goldman Sachs Financial Conditions Index, which looks at the speculative financial conditions on this one, which shows essentially asset bubble warning zone. I have no idea how they calculate this, so take it with a pinch of salt. But in terms of how they have how the Goldman Sachs calculate this, all I was looking at was the dotted line, and where they try to highlight that some of the when this graph goes over the dotted line, you see some mini crash happening. So at this point of a time, this is the farthest away from this dotted line. But the times are also different. When Fed is sitting behind you and saying, don't worry, kiddo, I got your back. This game can run way longer than we might anticipate. But if history has to show something, it does show that it's extremely overvalued. Things are becoming very, very speculative. And we have seen on meme stocks. GME is back. AMC is back in discussion. A lot of speculations happening again. Um, what next? And financials. So we talked about digital yuan um, a few weeks ago when China did the phase 2 of their digital yuan pilot project. That time there were only Chinese government controlled banks that were involved in it. What was exciting this week, or I would say scary this week, depending on which side of the spectrum you are, now even the private companies and financials and Tencent are getting involved. Or let me say they are being asked to get involved. Um, I don't know if any company is truly a private company in China based on what we witnessed around and financials a couple of months ago. Now I have my own doubts on can any company be truly independent if they are operating out of China. But anyway, this will be a good news in terms of the adoption of the ecosystem of digital currency. Starting with, this is a government created CBDC, central bank digital currency, created by China bank. And now even the e-wallets of my bank, which is Alibaba's or Ant Financials, and WeBank, which is Tencent's um, digital bank, they will also support digital yuan. So there will be a wallets on these apps which will have exactly the same functions that the other 6 state-owned lenders have in this trial. So it's now looks like this trial is going to expand more. Earlier it was only limited to a small set of users, but now we are getting and financials and Tencent involved in it. I think China is way ahead of any other central bank in the world in terms of creating their own digital currency. See a message. I think they basically check the margin account debt expansion as a whole. Uh, I don't know if this was looking at their margin account or not. Maybe I'll have to go back and get into the detail of this. Let me sip some coffee. Now we're going to talk about a couple of analyst day highlights. One is Twitter, and the other one will be Snapchat. There's a lot of good stuff came out both from Twitter and Snapchat. CMS, unless tech behind chains, is it not the same as checks and money orders? No, digital currency. Of course, the tech has completely changed. Number two is this is the currency in which when you talk of CBDCs, it means as so today in today's monetary policy, we don't have direct account with Fed. I have account with say Bank of America, Chase, you'll have with Wells Fargo, these regional or the commercial banks. So money flows from Fed to us through these commercial banks. When we talk about CBDCs, imagine each one of us having direct account with Fed. And if I need to transfer money to you, I can directly transfer it without going through the commercial banks. So it's going to be much more efficient, much quicker. But the flip side is everything will be known at a federal level, at a central bank level. So that's where the CBDCs will still will be centrally controlled, will be inflationary, but it'll be much more efficient way of conducting commerce with the subjects of that country. Jay Powell was asked, but Jay Powell, the response of Mr. Powell was that dollar being a reserve currency of the world, he wants to take steps slowly. He is okay if US is not the first. He wants that whichever way we are moving on to onto CBDC, we want to do it the right way. He's not in a mood to try, fail, learn, and try. CBDC is an acronym, Sudhir, for Central Bank Digital Currency. So CBDCs have been talked about in um, IMF, also within the Bureau of International Settlements. There are 7 central banks, at least that I'm aware of, which are working on creating their own digital currency. China is in the lead by leaps. China is way ahead of them. Some of the banks have already started pilot. Some of the central banks are just got their, I would say, documentation out, reviews happening, and US is still thinking about it. But this is uh, an initiative which I'm seeing happening across many central banks in the world, including ECB, Bank of England, and US Fed, of course, China. One surprise that came was a few weeks ago that Italian bank was already ahead in its pilot project, whereas they never declared their intention around CBDC. So that took a lot of people by surprise. All right, so let's look at what Twitter has to say on during their analyst day. So few things that stood out to me. Again, I'm not going into all the details, but some good things that I liked about Twitter. Number one is the way they are operating their ad technology. They have changed it. There's something we talked about, a month or 2 months ago, in which one reason of being bullish on Twitter was the change in ad platform that they had done last year. And it showed up in their quarterly results as well. And also in the recent quarterly results, we are seeing that the growth from ad has been growing. So this ad platform was in works for more than 2.5 to 3 years. Now that work was completed last year, and now we are starting to see the benefits of the new core changes or the core ad technology change from Twitter. They actually bought a company which was working on this technology, and then they integrated that technology within Twitter. So, tech integrations take time. It's not just plug and play, rip and replace any core functionality of a tech stack does take time. And so Twitter worked on it for almost 2 years. But now we are seeing the results of those 2 years of work. Other thing, in terms of how they have developed, they improved their software development process is a few years ago, it used to take 6 to 12 months to release any feature for the customer. Now they're aiming for a goal to release it under a few weeks. This is in a typical software term, this is where we generally call moving from waterfall model over to the agile model, wherein the concept is to continuously develop and release the features as soon as possible rather than waiting to go through, okay, I'm going to write down all the requirements first, and then I'm going to do a system specifications, write the tech requirements, then I'm going to develop it, then I'm going to test it. The models have changed because business is demanding new features, new releases at a much faster pace. And this also makes me bullish on companies that produce these technologies. JFrog. JFrog is one company which it provides tools for continuous integration and continuous deployment. If, as an engineering team, I'm done with one particular feature, why do I need to wait for all other features, other, let's say, improvements to come along so that we can do a big release for a customer? Those days are gone. Companies that still operate in that manner, in which, yeah, my new release of Windows will be coming in 2 years later, they won't survive anymore. Nowadays, the features are being released not in a big bang fashion, but in a piecemeal fashion. And those changes have been made possible by these all inventions around integrating your code continuously and releasing it. That's why we see a lot of growth in CI/CD in DevOps area. Okay, that brings in innovation. You can innovate at much faster speed. Other thing around Twitter, it's not only one product. They talked about Twitter Spaces, which is competitor to Clubhouse. Uh, we've seen a lot of growth in Clubhouse. It amazes me in terms of the number of users Clubhouse is picking up, and also the valuation. I think in the recent times we've looked at, it's being valued on multi-billionaire billion now. It's amazing because audio is integral part of communicating with each other. So Twitter wants to also move into that space, and they have a product called Spaces, which is you start the conversation on the main Twitter platform through a tweet, continue that if you want to talk over it on Spaces, and then once we're done with that, we want to subscribe to that, you like that person, you can use review. This was again another company which Twitter bought. This will be a kind of a competitor to Substack, means subscription to newsletter kind of thing. So Twitter is now looking to expand from the core product of just tweet, to a little, this I would say kind of a brand extension, is moving into an audio based and also moving into newsletter business. Though they have been also making improvements in their core business, like from a tweets, they also got fleets, but related products seems to be a next frontier for growth for Twitter. So what put fire behind Twitter stock last week was this one. Their goal they stated was to double their MDAU, MDAO, whatever you may want to call, which is monetizable daily active users, to 315 million in Q4 2023. That means in almost 3 years, they want to double their revenue. And that's lit fire under Twitter. And I think Twitter was up 10% at one part of a time, where the rest of the market was down. Twitter was in the green. It's like, I don't care what the rest of you are doing. They got a great presentation during the investor day, and Twitter was great. Miss Trump on Twitter. Yeah, but Twitter doesn't miss Trump. I mean, that was one of the, I would say, a fear I had when Twitter had banned Mr. Trump was, hey, you banned a person who's got 80 million followers, but really that didn't matter. The numbers show that it, it was immaterial. There might have been, I think there were more concerns about it than actually the impact. Twitter target raised 200. Oh, okay. I don't know if the target was raised 200 or not. I know it went all the way high up to 80.75, and right now it is at what, 77 or something. So, but these are the, I would say, some of the innovations which Twitter had been working on and now coming to fruition. Twitter and Snap are only social media companies that don't have my credit card data. So Twitter is working on that as well. So let's look at that. So Twitter has got Spaces, which is for audio-based conversations, which is competitor to Clubhouse. Twitter also have, this is a new product, Super Follow, which allows the, the the celebrities or the people who have big fan following to maybe monetize that. And we got a little bit of a glimpse of this when accidentally an information was released around Twitter subscription services last year. It was codenamed as Project Griffin. And once that got leaked because of a job posting, Twitter came back and said, yeah, we're working something around the subscription. But now we see what that, now they're starting to share more around what this subscription looks like. So there's a concept of super follow. So if you like someone, you want to follow them, you like what they have to say, and you don't mind paying, I mean, I wouldn't mind paying, $5 for someone who actually talks sense and who I would like to follow. So those, now there's a way for those content creators to monetize their content on Twitter. And frankly, if if you're following someone and you don't get to see those ads, that'll be much better. So a lot more stuff, monetizable stuff coming on Twitter. Rich get more richer. No, I don't think that's right. I would say the content creators, the good content creators, they get richer. So if you have a good content, you have a good following who follows your content, making sense in what you say. Yeah, now everyone has an opportunity to make money. I would say this is a level playing field. Asif, definitely a lot of room for growth. Long Twitter been a long wait and what so far. Yeah, so for me as well, I was little bearish, but when I read about their, not read, when I heard about their ad tech platform on one of the podcasts while I was jogging, and then I really started digging deeper into what are they doing on their ad tech, and that's where we talked about it. I turned from kind of bearish to bullish, and so far so good on Twitter. So that's around the Twitter. Mm, yeah, it will incentivize people to come up with valuable content for masses. Yeah, I mean, if for sure you, now if there is a way to monetize it, the content, you might as well provide some, the better quality of content. But, but I was interested in what I saw in Twitter. So next one, Snap. So let's look at what Snap had to share around their investor day. 1.5 million lenses created. So this is the lens studio in which the creators go ahead and use various features to create lenses. So I'm not a Snapchat user. I became a Twitter user very recently after my thesis around Twitter had changed. I became slightly active on Twitter, and now I'm finding value in Twitter. I don't know why for so many years I actually didn't use Twitter, but uh, if you, I realized that if I follow the right people um, who are putting good content, this is definitely a valuable tool, and I'll be willing to pay some money for getting the content from those people. Right. So looking at a Snapchat, 5 billion snaps are created each and every day. 1.5 million lenses have been created on Snapchat platform. This is more interesting to me, which is their advancements in AR, augmented reality. So Snap is one company that have been misunderstood for very, very long time. But they have been silently working on improving their tech stack, and their relentless focus on AR is what makes me a little bullish on this. And of course, later on, that came with the maps, etc. Something we talked about. We'll get into details today as well. But 200 million users engage with their AR every day. And those users who are using augmented reality were almost 2.5 times more likely to click to purchase. Why won't we? And if I can see how the pair of Gucci looks on my feet, this is way better experience than just looking at image of a shoe on say Amazon. Or if I can find out how this beanie looks on me, or the sweater, or the shade of lipsticks, it will definitely incentivize a lot more people to click to purchase. And this is a huge, huge tailwind behind Snap's business along with their maps. So this has just started. I mean, they've been working on their AR platform for some time. Now that is starting to, I would say, pay off in the results. So good number, $200 million, 200 million users engage in AR. Next one is Snap Map. I see a couple of questions. Are you an investor in uh, Twitter? Yeah, I'm long on Twitter, and yes, I have holdings on Twitter. So, yep. Disclaimer: yes, I am long on Twitter. Snap market cap is higher than Twitter, so casual chat tool makes more money than a serious chat tool. So Snap has moved lot beyond just a chat tool. So the whole growth that they're looking at is also coming from their business applications. AR is one. Snap Map is another one. So these all money is being paid to them by businesses who would like to advertise their products. And using the AR technology, users can figure out how the company products look on them or fit on them. What shade of red is right for me. So that's where it started with chat, but now it's growing its advertising business. And now they have these features to attract businesses to advertise more. Another one is Snap Map, which literally put users on the map. So now 250 million Snapchatters use their map every month. This also put businesses also on the map. So a lot of businesses are excited by the possibility what they see in AR as well as on map. Next, talking about ad management. Finally, they all make money through ads. So Snap had moved from 90% managed ad to 90% self-serve. So that means their cost of running their operations have reduced. Because it's a self-serve platform. You take time to build that platform, but now you don't have to employ people. Or as a company, you're letting your customers manage themselves rather than you trying to manage it. Those customers, those ads. But it's just a beginning. Snapchat comprises less than 2% of US digital ad market, but reaches nearly half of US smartphone users. Again, I initially had dismissed this platform as, oh, it's only for disappearing content. I mean, that's how the Snap started. It's only for the kids who want to share something, but they don't want it to linger on the internet. It's only for that content. But looks like they are moving, they have moved way beyond just the disappearing messages. They came up with their stories. They came up with the content around Discover. Then they started with AR. They got a Snap Map, made a lot of improvements on ad side and also on how they manage their technical infrastructure to reduce the cost around that. But I would say this is now is the time when they are just getting started. So if you look at established markets, they have above 90% of penetration in 13 to 24 age group, and 13 to 34, 75% of our users use Snapchat. So now this is, maybe we should have a new term called Snapchat generation. You know, no Gen X, Gen Y, millennial. Now this is a entirely a separate group called Snapchat generation, who is more interested in sharing photos, sharing videos than, calling the friends over phone and talking to them. Or maybe, rather than texting a message, this particular generation is very expressive and uses a lot of pictures, a lot of videos to express themselves. And now Snap's core, I would say, the company, they call themselves as a camera company. Now I understand, okay, how does that relate with what they want to be? I mean, I laughed at them when their S1 came out a few years ago, in which Snap had mentioned, we are a camera company. I'm like, what? What are you talking about? You have a chat application. What it has to do with the camera? Uh, I kind of dismissed them at that point of time. But now I see all the growth that they're doing using AR and all that has to come from camera. It took a few years to play that out, but I think now the vision is becoming clearer than it ever was before. So while they have good penetration on the developed markets, there's a lot of growth still to become from an ad space. On the growing markets, there's still a lot more room to grow. India, Indonesia, only 20% penetration in this age group, 30 to 24. In Mexico, Spain, Italy, only 45%. So while a lot of opportunity to grow the revenue from the developed market, the ad revenue, there's tons of opportunity here to grow your user base in the developing markets. See, if says they declined 3 billion offer from, it was from, I think, FB. I don't recall it was 3 billion, 6 billion, but yes, there was a Facebook wanted to buy out Snap, and they had declined that offer. And at that point of a time, most of the financial media was very negative, saying Evan Spiegel is his head is in the clouds. I don't know what Evan Spiegel thinks about himself. You don't have you're just a chat messaging company and someone is willing to pay you. I think it was $6 billion. Maybe if someone can Google and find it out. Uh, and if someone is willing to pay you this much amount, um, just take it. Nobody at that part of a time was thinking, I think, except Evan Spiegel in terms of what he has in his mind. He's a little eccentric CEO, but I think now he is a little bit winning the confidence of investors as well as their customers. Oh, it was so 3 billion. Yeah. So net Snapchat reaches 70% of 13 to 34-year-old in the countries comprising over half of world's digital ad spend. So now they kind of were reaching, they got the reach. Now they can monetize that reach through ad spending. So let's look at how that has helped. Average revenue per user in 2018, 6.29, 8.29, 10.09 in 2020 globally, which is 27% CAGR, which is pretty good. In US, almost 40% CAGR, which is right now their biggest market. And what, they have only 2% market share of digital ads. So there's a lot more room for them to grow. So let's have a look at their products apart from just the chat. It started with the chat, and most of us probably know about the chat. So sorry, what is CAGR? Sorry, I should have explained that. So CAGR is compounded annual growth rate. It means how the company has been growing each year. And so if I just look at from 2018 to 2020, I would say this is what, $3.80. This growth is 50%. What if you're looking at a compounded annual growth rate every year, it has grown almost 28%. That's what CAGR is. So it is Snap is much bigger than fleeting text. They got stories, they got discover product. So this is ARPU is average revenue per user. This is the revenue number. Earnings? Who care about earnings? Oh, I'm just kidding. But in today's environment, who's looking at whether you're making money or not? Hell, companies or investors not even looking at whether you have revenue or not. There are many companies which have got multi-billion-dollar valuation with $0 in revenue. Um, welcome, Peter. Thanks for joining in. Uh, so what else Snap has? They got a stories and discover. Again, they're adding more and more content on their platform. And you can look through the details if you go to Snap website and or just Google it for Snap Investor Day Analyst Day 2021. There's a big PDF. So 70% increase in time spent on watching shows in 2020. Commercial revenue have more than doubled in each quarter of 2020. More than doubled year over year in every quarter as compared to 2019, 2020. In every quarter, it has doubled. Camera or AR. This is what probably is most exciting for me is 30 app opens per day on an average. 5 billion snaps taken per day on an average. 200 million Snapchatters are engaging with AR. And over 1.5 million AR lenses created by our community. This is where a lot of businesses can also make use of this platform to advertise their product. This came out new, which is When TikTok became famous, why would any other company not have the similar product? Snap came with their own called Spotlight, which is nothing but what TikTok does. And now they got 100 million monthly active users on Spotlight and 175,000 submissions per day. More exciting is Map. It's to onboard local brick and mortar businesses on our community as our community reopens. So they're gonna put the businesses on this map literally. And you can also see where your friends are, which businesses you like are on the map in terms of locational, etc. So again, a lot more stuff to come on map. This is again one of their newer products. So we should be able to see a lot more uh, invention or innovation in this. So that's around Snap. I didn't get into the numbers specifically. There are a lot of numbers we want to look at. They're over there. But right now I'm focused on if they are increasing their revenue, I'm okay. Net income in last 5 years, they maxed out on losses on 2018 and last 2 years improving percent income now, but still not profitable. Yeah, so if you look into their, I think they have made improvements in terms of their technical cost. Earlier, I think Snap was renting out everything to AWS, and AWS doesn't come cheap. But if you are just growing your company, I mean, and you need a scale, there's not much options that you have. Everyone goes to AWS. But as those companies start to grow their revenue, grow their user base and usage, AWS start to become more and more expensive. And many of these big companies start to build their own infrastructure. So if I recall correctly, I think Snap had completely outsourced it. Now they're building some of their own infrastructure. Uh, in the whole PDF deck, they talk about cost reduction, um, the initiatives that they have taken. So I think that's helping them in reducing the cost. What about competition? Competition has been there always. Facebook and Google are two big competition, but and they have been existing. These are the challengers. They were Facebook and Google. They both were there for ever since Snap started. So I'm not afraid of Facebook or what Google have to offer, but Snap is doing something which is completely different. Unless Facebook buys and kills them. And the best thing is Snap doesn't have the challenges that Facebook and Google are facing around content moderation, around scrutiny from lawmakers. No one is willing asking even Spiegel to go to Congress and testify. None of that sort. So they have their own problems. Now, of course, Facebook is known to copy the features from other competitors. They can try to do that same here, but I think Snap will still continue to do well. You need to have that complete focus to be the best in that category. Is FB watching this? Of course. I think Snap looks good with a lot of innovations over the last 2 years. Yes. So I remembering, dealing in Snap at $17 all the way to $6, $40, and now where it is 70 plus, something like that. Uh, Pins, Snap, which one you prefer more? The good thing for us as an individual investor is we don't have to you know pick one over other. I own both. I have bullish thesis on both of them. So I own both. Don't ask me to choose one kid over another. That's not fair, Asif. So again, Pinterest, why I'm bullish on Pinterest is they already got a people who are looking to shop something. What else you want as a business? What else I want? I want the users who are looking to create something. To create something, you need to buy something. So users are already primed when they go to Pinterest. They're mentally already primed to buy something. If they can find out what the material that if they can find out what they want to create. You have an idea, you go to Pinterest to figure out, how should I redo my desk? Okay, I'm gonna go to Pinterest and look at how other people have done that. And then I'm gonna buy the stuff which they have used so that I can redo my desk. So that's why I'm more bullish on Pinterest is they already got users who are going to their platform to buy something, and businesses have got great potential to attract those users and sell them stuff. So I won't choose either or. I own both. FB is working on audio chat. Oh, for sure, FB won't stay behind. I mean, after the growth that they have seen in Clubhouse, I also heard that FB is working on their audio platform, Vijay. So that was about the analyst day highlights from Snap as well as Twitter. Disclaimer, I have positions, long positions in both. I would say in Twitter, long short, in Snap, long. I have to take the short position um, in Snap now because it has jumped a lot. Pick one is classic Twitter question. Oh, no one on Twitter has asked me to choose. No, I won't choose. Okay, let me sip the last coffee. All right, so let's look at Square's latest earnings. I'm gonna go through only two companies for earnings, Squares and Jumia. So what stood out for me on the Square was that on their investor letter day, very prominently, they got a B here, a gold coin. And take it with whatever context you may want to take it with. I saw some people on Twitter saying, the Bitcoin in a bubble. Is the Square saying that now Bitcoin is in bubble? I don't know. But all I'm looking at is that on the very first page of their investor letter, they are giving a prominence to Bitcoin. And that was all throughout also throughout their investor shareholder letter. There were 63 mentions of Bitcoin. 63. So let's look at how Square did from business perspective. Gross profit up 52% year over year. And again, if you break it down, this huge growth has come from their Bitcoin business. If you take that out, I think the usual growth from their cash app and from a merchant services business probably was around 27-28%. But I mean, I don't care how they get this, but they're 52% year on year growth for a company like Square. It's huge. It's not a micro cap or a small cap. It's a big company. Cash app gross profit 162% year on year. In Cash app is I would say their app which for P2P transfer. Now you can buy shares, you can buy Bitcoin and other cryptocurrency as well. Seller gross profit only 13% year on year. Cash App. Let's look at into Cash App. In December, the Cash App reached more than 36 million monthly transacting active customers, up more than 50% year over year. So in 2019, they had 24 million. Now they have 36 million. And the cost of acquiring customer is less than $5, which is, I would say, one of the lowest costs in the big social media or companies like Square. So this is will continue. In my opinion, this will continue to be their growth engine, despite or whatever else Square is doing, but a lot more bullish on what their Cash App has to offer. Let's look what they had to say about Bitcoin. So we'll come back to this topic later. But what they found that there are users who are trading cryptos, they are more engaged than the rest of the users. Obviously, because the crypto market is so volatile. If you have bought if the users have bought crypto, they'll probably check the value of their holdings more often than the other users. So I'm not surprised that those users are more engaged. It is because of the asset volatility itself. Cash generated 1.76 billion of Bitcoin revenue. So that's where a lot of revenue coming from Cash App. And 41 million of gross profit. Up 10x and 13x, obviously, because they didn't have much users transacting on the Cash App or Bitcoin uh, in 2019. A lot of Bitcoin came back into public memory in 2020. So 3 million users in 2020 traded on I don't think it's just Bitcoin, but traded in crypto asset using Cash App. And in 2021, they kind of was sneaked in this information. In 2021, in January, 1 million new users came in and traded crypto assets. So Square as a company are seeing a lot of growth from users who want to get exposure to a new type of asset, which is crypto assets. Bitcoin being the largest one. So let's talk about Snap as a company. Sorry, Square as a company. What's happening to me? I'm Square, Snap getting confused. Other stuff what they did, apart from what their users are doing, Square also purchased another tranche of Bitcoin. They got $170 million worth of Bitcoin just for themselves. This is not their amount that their users are purchased, but this is what the Square as a company have bought as a part of their corporate treasury functions. Let me put it that way. So to the treasury department in any company have to make the best use of the cash available to the company. Cash sitting on balance sheet generates nothing. If we are holding a cash, it's actually losing in value. Just like we talked about on option Greeks, theta loses value every day, or options lose value every day because of theta. Cash loses value every day because of inflation. So holding cash on balance sheet and sticking to it is not the best strategy. Of course, you might want to hold in still because if you need it for some exigencies. So the Treasury Department, the treasurer, corporate treasurer's role is to figure out how best to deploy the cash. Square picked up $170 million worth of Bitcoin. Now the 5% of cash and cash equivalents on Square balance sheet is actually invested in Bitcoin. So that's for around the Square earnings. So I don't see anything which is concern for me here. So I saw Square fell down. Yeah, so there was a question. Square went down on earnings. Why? I don't know. Maybe investors are expecting a lot more. But one reason definitely was because they've got $170 million worth of Bitcoin, which is a volatile asset, and some investors may not have liked it. So there were questions to Square CFO, Mrs. Amrita, around why Square is picking up Bitcoin. But she seemed to be really bullish on holding Bitcoin on Square balance sheet. Yeah, so the growth had slow. So they're still growing. Growth has slowed down a bit. Well, that will happen. You cannot continue to grow at the same rate at which you were growing when the base was smaller. So, but I'm still bullish on based on what I saw on Square and continue to hold that. Deals on Cash App are good. Now they're giving BTC as a discount rather than cash. So I haven't downloaded Cash App. So which is, but it's good to know that they're giving BTC as a discount. That's why maybe they have want to hold some BTC. But isn't it ironic because the main function of the Cash App is to actually replace cash. And if I want to transfer money to my friend, instead of handing them the bills, I would use Cash App to transfer money. But the name itself is cash, which is ironic. More BTC holdings will lead Square to follow volatile BTC prices now. Not yet, I would say, because it's only 5% of their cash and cash equivalents, not like MicroStrategy. MicroStrategy has gone to completely extreme level of holding 100% of their cash and cash equivalents in Bitcoin. Not just that, MicroStrategy is actually taking on debt to buy Bitcoin. So that is one complete extreme. I don't think Square has reached at that level yet. It's only 5%. So that shouldn't that shouldn't matter too much in terms of the valuation on Square. But the fact that if Bitcoin goes down, and then those users who have been transacting, who have been very active on Square Cash App, they will start to transact less. The revenue from that could come down. That will impact Square, not the Bitcoin that they are holding on their balance sheet. So I want to make it clear. The the Bitcoin being volatile, that volatility will impact the revenue of Square company and hence will have an impact on it. But the fact that they're holding 170, earlier they had 5 million, which I don't know, now that may be worth 20 million. Maybe they are holding, let's say, around $200 million of Bitcoin on their balance sheet. That won't impact much on the share price. Bitcoin has hurt Tesla and ARK funds too. I don't know. Tesla, I don't think so. Tesla had what 1.5 billion only. But ARK, yes, ARK had big positions on Bitcoin. All right, so let's jump on to Jumia. So I would quickly, Jumia, I won't take much time. We had already done a I think, deep dive in Jumia a while ago in November. Was bullish on it, opened up positions on that one. Only thing, come on, open it up. Yeah. So I listened into their earnings call, and what took me little by surprise was the change in the narrative of the company. So I've been bullish on Jumia. Uh, what I want to specifically focus is the sheet wherein what I found management was more focused on reduction on going towards profitability than increasing the revenue, which was I was hoping that this company, which is the only, I mean, one of the biggest players in e-commerce in the continent, where we could see a lot of e-commerce growth in future, would focus on grabbing as much land as possible in increasing the revenue. But most of the time, management was talking on how great they are doing in reducing the cost and their path to profitability. So I am toning down. I mean, it depends on what kind of investor you are. But then, okay, if I was super bullish earlier on Jumia, maybe I'll be a little less bullish now. Just because I want them to grow and focus on growth. Right now, they are saying that they will focus on getting to profitability and then focus on growth. So, I mean, so from a usage side, the phones and electronics reduced, which is what they have already been working on. This is as per what their business plan they have shared, which is good. Transaction payment volume increased 58%. Great. That's what we want. The payment volumes is going to be could be another very big driver for this company as a revenue. We have seen that in Mercado Libre. So similar storybook Jumia is following from Mercado Libre side. 20% year-on-year growth in marketplace revenue. It's great, but hey, it's 20% only. A company, they're what, 7 billion? I don't know. What's the latest one for Jumia? I know last time when we looked at it, this was at 2 billion. Then that time I was like, hey, this should grow higher. And we were bullish on it, complete bullish thesis. Now it's 4 billion. Cost, they have reduced their cost 10%. So again, the next one they talk about how they have reduced their losses, EBITDA losses significantly. And then again, they're talking about how they are significantly transforming their P&L. So I wouldn't say there is anything wrong in this. It just depends on what kind of investor are you. Especially when I'm looking at Jumia, I'm looking at someone to go and grow their market share as much as possible, as soon as possible, and worry about profitability a little later. I mean, we have seen this strategy work out in Amazon. We are seeing this being worked out in Mercado Libre. We are seeing this being worked out in, say, Limited. Jumia is trying to do something different. They also did a secondary offering earlier this year. And then there were questions being asked on why not use that money to spend heavily to get your customers, increase your customer base. Management wasn't really, planning to do that. So I am a little less bullish on Jumia. So I'll be happily selling a lot more closer, higher delta covered calls on it to aggressively reduce my cost basis. You could take your own decision. Till now, I've been holding off, higher delta calls because I wanted them to grow. And my thesis was if they grow their revenue at this point of a time, that's all we need. But management has a different viewpoint. So while their gross profit increased, their gross profit after fulfillment reached a record this million, loss decreased. I didn't see much increase on the revenue side. So if you look at the revenue actually declined, which is okay. The revenue decline is okay because they were moving from doing smaller volume, high value items. They're changing the product mix to everyday items, larger volume because the margins are higher in that. So which is okay. But then I thought in the future they will continue to want to focus on revenue growth, but not anymore. So that's what I wanted to share about Square and Jumia and their two earning reports. Coinbase IPO may have an impact on Square too. I think both of them are different. Coinbase is the leader, which is what we're going to talk about now. So, which is a perfect segue into let's look at Coinbase. And Coinbase came up with their S1. Now we can get a peek into what this company is about. What do they do? And what are users buying through Coinbase? Okay, so I see a comment. Coinbase fees are expensive. App sucks. Can't limit order, etc. No feature. Not even trading history. You're not trading on the right app. The Coinbase has got two apps. One is for completely novice who's just getting entry into crypto world. Just want to buy it. They don't want to figure out what's the limit price, etc. They want to look at what the market depth is. That's the app probably you're using. There's another app. That's where what Kunal mentioned. I use that app, which is for a little more serious investors. You want to do a limit order, you'll do limit order. You want to see what the market depth is, you could do it. You can see all trader, your order history, everything is available. And it is cheaper. And the user ID that you have on coinbase.com, that works as well. So you don't have to create a new user ID. All right, so let's look at Coinbase S1. This is what kept me busy yesterday night, late night, because this came out only on, I think, Friday itself or Thursday. And I only got to know on Friday morning. Then I said, okay, I'll start working on this in the evening. So it took a few hours. So let's look into Coinbase and build our investment thesis on this one. What does the company want to do? It wants to create an open financial system for the world. It was started in 2012, so it's not very old, just almost finished 8 years. So pretty young company. It will trade on NASDAQ under ticker Coin. Very appropriate. The name is Coinbase, and all they do is allow users to trade in crypto coins. So what better ticker for them? Right now, looks like in a private market, it is being valued at $100 billion, which is bigger than CME, which is Chicago Mercantile Exchange, ICE, Intercontinental Exchange, CBOE, Chicago Board of Options Exchange, and NASDAQ. I haven't put NYSE because NYSE is part of ICE. So this is going to be, if they list at this valuation, and probably it will be higher than this, or it will be bumped up higher after they list, will become the most valuable exchange in the world. And it's a global company, a truly global company. It lives and breathes on internet. So they have no address. It was surprising to see on their S1 document, address is not applicable. One good thing I saw there was also they paid tribute to Satoshi Nakamoto. I know this is just symbolic, but still a good gesture by saying that the other copies are being sent to, of course, these lawyers plus Satoshi Nakamoto's address, Bitcoin address. Anyway, so let's jump on to our building our investment thesis. As always, we look at company, we look at the business environment, because doesn't matter how great the company is, if the overall business environment or business itself is small, then there's a limit to what that company can do, but not in case of crypto. I mean, we've been talking in multiple times, almost in every session, about the growth that we are seeing in this market. And from 2012, since their founding, to 2020, end of 2020, it's a compounded average growth rate of over 150%. 150% year over year. I don't think I've seen this CAGR of 150% in any other aspect. Same period, the retail users grew from 13,000 to 43 million. Now, this is a huge exchange. This is a big broker. So they are seeing growth a lot of in crypto market, as well as the number of users they have. And we know why this is happening, because the whole crypto economy has got tons of different use cases: store of value, real-time cross-border payments, democratization of financial markets, and peer-to-peer financial applications, which is DeFi, the stuff that we have talked about a lot. And also digital marketplaces. That's where the NFT come in picture as well. So this world has just started, and there will be many more use cases that we don't even know about right now, which will come to fruition as this economy matures. So pain point that this company's product is trying to address is, number one is access. Of course, not applicable in US, but outside of US and many other countries, a lot of people don't have access to traditional banking systems. Number two is efficiency. This whole crypto economy becomes much more efficient. If I need to transfer something which is store of value to you, transferring a piece of crypto asset, so Bitcoin, is way faster, quicker, way cheaper than me trying to give you a bar of gold. Not that I'll give you, but let's assume it is much more efficient to, to transfer either a store of value, or if you want to use it as a currency. Again, that depends on the government regulations, etc. But in any case, it is much quicker. Cost and redundancy and inefficiency result in higher cost for end users. So, and I've seen, if I were to transfer, one coin from one address to another, if that is worth $1,000, sometimes the fee that I pay is like a few cents. I'm like, and that gets transferred in 10 minutes, 20 minutes, 30 minutes, depending on their blockchain, their mining timing, and how many confirmations they need. But well, I pay a few cents. And here, if I want to do a wire transfer, I have to pay $16 to my bank, irrespective of what's the amount of a wire transfer I want to do. Like, it's way, way cheaper to just move it around, and it happens in a few minutes. So what do they have? Their products, Coinbase.com or Coinbase app for mobile. This is the app which I think Naresh was saying is not a good, but it's very easy to use. Once you log in, you say buy, you don't have to think much. You just tap on buy and boom, you can buy any crypto asset. They got a very neat interface, not too much of an information, because that could become overwhelming for someone who is new in this economy. This economy by itself is a little difficult to understand. And on top of it, if you make this whole buying process a little more involved, that could just put off users. So generally, if someone asks completely new, if I want to buy, what should I do? Go to Coinbase, very easy to buy. But then you graduate out of this as you become more involved in this, move to pro version, which is pro.coinbase.com. I think Kunal, thank you for putting that URL. Or if you're trading on mobile, they have a Coinbase Pro app. Here you can do what you generally can do in your um, other stocks. You can do a limit order, you can do a market order, you can put a stop order, you can look at the order book, you can look at a price chart, you can look at a market depth and all that stuff. But if you directly jump onto this interface, what should I do? Where should I go? So they got these two products, Coinbase, the namesake, and the Pro Coinbase. But they got other stuff as well. So for retail users perspective, you can invest, send, receive, save, stake, borrow, lend. So these are all the services that they provide. So the way they make money is when I buy a Bitcoin or any other coin on Coinbase, or they make money from the transaction fee. Or if I send it to someone else, Coinbase get a cut. Or if I sell those assets, Coinbase get a cut. So that's a transaction revenue. Then the other revenue sources are storage, staking. Again, staking is a concept in which it's like putting your money in a CD. What are we doing? We are staking our money in Bank of America. And for that, Bank of America gives us 0.02%. Okay, when we are talking of CD, it may be 0.5%. So similarly, these crypto assets can be staked and you can earn some yield on that staking. Don't want to go into a rabbit hole of yield farming, but there are ways to do it. So looks like Coinbase also provide those ability of staking, borrowing, lending, distributing, build, pay. These are all again. So they have three types of users: retail users like you and I, institutions. So if you thought this economy is only for the younger generation, not for serious people, there are institutions playing in this. And of course, they have ecosystem partners of other exchanges, other wallet creators, and stuff like that. So today, they have approximately 43 million retail users. That's a huge from a brokerage. Imagine, it's a brokerage firm which allows you to buy these stocks or assets. They got 43 million retail users, 7,000 institutions. And these institutions generally include hedge funds, family offices, university endowments, pension funds, and companies like Square, Tesla. I think Tesla bought it through Coinbase. I don't know where Square bought it through, but if I recall, Tesla bought that 1.5 billion worth of Bitcoin through Coinbase. So they got 7,000 institutions as their customers. They got 115,000 ecosystem partners. Again, this whole economy is big and the ecosystem is growing. Coinbase is just an exchange where you can buy and sell. Then there are wallet creators. Then there are other providers who provide custody solutions, etc., etc. They integrate with over 15 blockchain protocols. Again, Bitcoin is just one blockchain protocol. Ethereum is another one. Neo is another one. Stellar is another one. Cardano is, they don't have Cardano. That's different. But Cardano is another blockchain protocol. They support over 90 crypto assets available in over 100 countries. I see a question. Pro and Basic are two different accounts. My holdings don't show up in Pro. Again, so Asif, In a crypto economy, everything is tied to your wallet address. So your wallet address on the Pro and on the normal version will be different. So that's why it won't show up. But your user ID works. But in the back end, it's tied to a particular address. That's why it won't show up. Okay. How does it make? So the question: why would they not have Cardano? So here's my thought on it, because I also thought, well, why do they not have Cardano? Cardano is now becoming number 3 in terms of market cap, and they don't have it. So here's the reason. Coinbase has got very specific criteria in terms of how they will pick up digital assets. Yeah, I don't want to call them as coins, because not every coins means people start thinking about this is a currency, and Bitcoin, who is using Bitcoin as a currency, right? So I won't call it as a coin. I'll call it as an asset, digital asset. So Coinbase have a very well-defined criteria on which digital assets they would want to pick up and list. And one of them is criteria is amount of decentralization in the particular ecosystem. So now when Cardano started, it wasn't decentralized. The whole development was being done by a company called IOHK, Input Output Hong Kong. That's a company which is behind the development of Cardano as a protocol. Whereas Bitcoin is completely open source. I mean, Cardano is also open source, but Bitcoin is completely decentralized in terms of a development as well as the mining. Cardano wasn't. Most of the Cardano's validations of the transactions was happening by a very small group of the miners, which were all affiliated with IOHK. Reason? Cardano wasn't, they haven't got their chops in yet to support decentralization. And that work was completed in 2020, end of 2019, early 2020, as a part of their phase called Shelly. That got deployed in their testing environment very recently. Now it will be moving on to their main main network, not the test network, somewhere maybe end of this, like in a few days, or maybe in March or something. That is why now we are seeing a lot more interest getting in Cardano. But I think it is still time before Cardano can become way more decentralized. But now the technical work has been completed. Now they will be deploying it in a production environment. Then I hope at least that part will be addressed. So I'll have to figure out what are the other ones. But this is the one big one is they don't have it. They don't have Polkadot on Coinbase, if I recall correctly. So because they were not decentralized. But Cardano is work. The Cardano was implementing all the work required for decentralization in the recent phase, which will go live pretty soon. So their business model, land and expand, they started with this whole buying and selling of coins. Then you could stake them, and then the storing and now borrowing, lending. This is all DeFi stuff, which they started to add in 2020. Yeah. So we talked about it. The store is if you let Coinbase manage and store your coins, take the custody of your digital asset. And this is a big issue in this economy, is the custody of the digital asset. There have been many horror stories of people losing their assets because they were not secure enough. They had downloaded the private keys through a wallet on their laptop got hacked. Someone put in a keylogger, and once in this economy, if your key is lost, then there is nothing much that you can do about it. So storing, custodying this digital asset, how to store it securely was a big pain in 2017. Work happened on it 2017, 2018, 2019. Lot of custodial solutions are now available, and that is why we saw a lot of institution investors jump now becoming comfortable in 2020. It's not that suddenly they woke up and wanted to say, oh, we want to have Bitcoin. No. As a company, if I want to have a Bitcoin, what if I lose that tomorrow? It'll be very difficult for me to explain to shareholders why I invested in it. Now we got a companies like Fidelity. They provide custodial solutions. We heard from BNY Mellon. They are the world's biggest custodial solution provider for other assets. They are getting into digital asset custodial solutions. Galaxy, they all provide custodial solution. Coinbase has it. So that's their product is custodial solutions, and they earn fee. Most of the institutional investors, no one wants to manage those cryptos. They leave it up to these experts. Staking revenue is, I can give an example of, if you want to deposit or stake your dollars with the bank, you earn interest. Similarly, you can stake your coins on many exchanges which need those coins for liquidity purposes, and they'll give you yield. Yield is, as in some cases, as low as 12%, as high as 40% per annum. Yeah, you heard me right. I'm saying as low as 12%. Distribute is when they engage those asset issuers. You know, they run a campaign on on the Coinbase.com or pro Coinbase on how to educate users about their crypto asset. They get some campaign revenue. They also have an analytics service. They get a license revenue from that. So they have other revenue streams apart from just the transaction, but the biggest portion is still transaction. 96% of the revenue is from transaction. In future, we would see as people become more comfortable with other services, we might see revenue increasing on others one. Right? It is still at a very early stage. People are not even comfortable in buying and selling. Forget about staking. So long way to go over there. Let's see a question. Must be great margin for custodial fee. It's like bank charging you for your cash holdings. But they also have a, I don't know about the margins, but custodying this also would involve insuring yourself against the uh, event of that being lost. So they have to pay some insurance cost. And many times this custody would involve your multi-sig, a specialized hardware, and all other stuff. So I don't think it is just flipping, in case of bank, it is just flipping the numbers on the computer. They don't have a physical cash from me, which they need to store it somewhere, right? It's just a number on a computer. In case of these, you don't have a physical key, but you have a digital key, which you need to protect, like your life. And there are ways to protect those. You get a specialized hardware. Those hardware need to be air gapped. So you need to make sure that no one has access to this, it's not connected. So you need to put it in a very secure data center. You need to put it under multiple signatures. There are ways to do that cold storage, and it does cost, but still, those could be a one-time cost and the margins will still be great. I don't have that information. How secure is staking? You better be careful in terms of where you want to stake. I don't have personal experience. I just don't want to leave anything outside on internet. I'm a little more paranoid, especially after I heard a story of my friend who actually works in a network security business, got his stuff hacked. And that time he didn't bother because there were a few Bitcoins, which is too big for me. But now, if I look at today's rate, I would say he could have become a millionaire by now. So staking means I have to, I mean, I haven't looked into the staking and what I know. SushiSwap, Uniswap, those are very popular, but I haven't used any one of them. What are the competitive strengths and the moat? Strong brand. If you ask anyone new, what did most of them are coming from Coinbase. Now they're starting to get competition from PayPal and Square, but PayPal and Square have just started. Coinbase have been there for long, and this is still the most favored method of someone taking a dip in a crypto economy. Okay. It was the first mover advantage. They were the first regulated exchange, and they are very strict in terms of the security and regulatory compliance. One of the big issue in this area is security. And what if you know your government bans you? We saw happened with Binance. So Binance had to come up with the Binance US. We saw what happened with the Poloniex. They are no longer allowed to offer services to US customers. So if you are complying with the regulatory, you are regulated exchange. That's a huge, huge deal. People ask me why not about there are hundreds of exchanges. My answer is if you're in US, if you're a US customer, stay within the realm of regulated exchanges. We never know when some of those exchanges will have to stop servicing US customers, and then you will be asked to move your coins. And if you don't check those emails, then tough luck. You may not be able to log in later. So this is a big deal. Competition, other regulated exchanges in US, which is Kraken, Gemini, Binance, which is Binance US. Let me put it that way. Now, so after Binance was asked to not serve US customers, they actually created a US based entity which is regulated by US. It's called Binance US. And now we're getting Square and the PayPals of the world. They are not exchanges, but people can buy coins on Square and PayPal. And then these Square and PayPal use other third parties to actually convert your dollars into Bitcoins and then store those Bitcoins. But the biggest, most worrisome would be the decentralized exchanges. Today, because I'm trading on Coinbase, Coinbase locks my user ID out, I'm out. US government says Coinbase don't serve Vivek, I'm out. The other one could be those decentralized exchanges, which are growing up like mushrooms. So you don't know which one will even survive. 2 years ago, none of these were there. There are different names. I'm sure those names still exist, but they are probably way down in the priority, right? Kyber, I remember talking about Kyber Pass and 0x and DIDX is still there. Number 30 needs to be number 1. Yeah, Kyber network is 15. So these things keep coming and keep changing. But if they become more secure, and again, this could be a few years game, right? So then why do I need to trade on Coinbase? Why do I need to pay fee to Coinbase? I might as well use one of these, provide a liquidity, do some yield farming, stuff like that. Risk. Number one, US regulations can make Coinbase uncompetitive because they are competing against other exchanges whose governments probably are more friendlier to this economy, or they are competing with some decentralized exchanges where there is probably no control. So, and that's what Coinbase had come and hinted multiple times saying, If the regulations become too burdensome, we may have to look at another location. I know the CEO said that, then he retracted his statement. But that's one risk. And this they identified in their S1 is identification of Satoshi Nakamoto, and the transfer of Satoshi's Bitcoins could be a risk. I don't know why. It may be because if we see a huge transfer from Satoshi's address, I think there is probably 1 million Bitcoins in that address. If those start to move and sell, people could just panic and start selling because this is the biggest whale in this. So generally, when the whales means anyone holding more than 1,000 Bitcoins in the in parlance of crypto. And I think humpback whale is more than 10,000, something like that. So generally, when the whales start to sell, there's a little panic in the market. Third biggest risk is the future is tied to Bitcoin. So it's going to be extremely volatile, more volatile than what Square could be. Because as we will see somewhere later, most of the activity happens based on where the Bitcoin is trading right now. Management is all good. Brian, the folks are from ex-Google, ex-Flipkart, ex-Facebook. Skin in the game, huge. So Brian Armstrong is the CEO, hold overall 21% of voting power. Shuroji Chatterjee, he is a chief product officer, hold 8.2%, got a 2 million shares. This is a legal counsel, Mark Andreessen, he owns 24.6%. This is very, a different scenario. We have not seen someone other than the founders, owning a lot more percent than the founders. But in this case, Mark Andreessen actually owns 24.6%. So big skin in the game. So let's look at the key metrics. Verified users, 2019 was 32, grew to 43 million. Monthly transacting users grew 180% higher. We know what was happening in 2020. It was because Bitcoin went gangbusters. So when the season is good, everyone wants to transact. So no wonder their assets on the platform grew from 17,000 million, 17 billion to 90 billion. Trading volume grew as well. And they are profitable. Now we got a company which is actually profitable and going for IPO. Wow, what a change. So other numbers, we already talked about all of them. I think 7,000 retail institutions. We already looked at institutional investors. This is how their users have been growing year over year. Consistent growth, which is good to see. And now this is the chart which is telling in terms of monthly transacting users and crypto asset volatility. 2017, 2018, there are 13 million monthly, 2.7 million monthly transacting users. Now it is 2.8. No one was transacting during these times. Bitcoin was, the whole crypto market was in a bear phase. So this is very strongly tied to the volatility of the market itself. Now let's look at what are people buying and selling. 70% is Bitcoin. Even though they have more than doubled the assets that they support, but Bitcoin is still 70%. Ethereum is 13%. Other stuff is 13%. And 4% fiat means either it's your US dollars. So this is a government issued currency, US dollars, euro, or yen, etc. So these are the asset mix on them. Treasury. What do they do in their treasury? They have 130 million in Bitcoin. Okay, we talked about treasury function like Square has got. They got also have their treasury. 130 million in Bitcoin, 49 million in USDC stablecoin, 24 million in ETH, 34 million in other coins. You know what those are. So that's their crypto treasury. So they're not huge on Bitcoin as a treasury. And I can agree to it because their rest of the business is already hugely dependent on how the Bitcoin moves. So what's the point in holding so much on the treasury side? P&L statement, like I said, they are profitable for a change. We have a profitable company going IPO. Some other fun facts over here. If looking on where we're gonna get some new billionaires over here, if it gets valued as 77 billion, Mr. Armstrong will be 16 billion worth. If it's 100 billion, he'll be worth 21 billion. So if you're planning to buy a house in Valley, you got some competition. That's all I'll say here. And this one was how it started. So when they started, crypto, no one knew what the crypto is. Banks were not allowed to provide services or not forthcoming to provide services. So for them to get services, to, for example, if I were to own a Bitcoin, I need to transfer money from my banking account onto Coinbase. That happens through ACH. And no one was willing to work with Coinbase. So they actually had to give warrants to Silicon Valley Bank to persuade them, please offer us with ACH services. We'll give you our shares from those times. So they offered them 2014 from those times to now, wherein now the banks, in with the recent OCC banks, are providing services to these regulated exchanges. Valuation, we don't have a much info. I mean, this all $100 billion is based on the private valuation. Coinbase hasn't come forth and told how many shares they want to sell and at what's the price range. But they will update their S1. We'll look at it at that time. So my conclusion is an extremely attractive sector with a long tailwinds, but a high risk because of regulations and disruption from decentralized exchanges. But I think that's still a few years away. So my conviction is high on this one. But does that mean I'm going to buy on day one? Probably not. I generally don't buy on day one. But I may pick up a few shares just to keep it on my radar. But I'll wait for the initial pop to fade. I do expect there might be a pop, but that all depends on what's Bitcoin doing, in that week. This will be very exciting to see, what happens with Coinbase listing. They are not. Oh, I forgot it. I think they are not going with the traditional IPO route. I wanted Coinbase to go through ICO. To be very true to the crypto economy, they should have gone ICO rather than going IPO. But I think there's a lot of regulatory concerns on ICO. So they are finally going IPO, but at least they are not going through the traditional route with the investment bankers. So they are going through direct listing. So we'll see what happens at what price point they plan to list, and then what happens with the R guys. So that's it on Coinbase. Okay, do you know how BTC transaction volumes compare with for PayPal and Square? Oh, I can find that out, but it will be way higher than PayPal and Square. Let me go through some other questions. Can you elaborate how exactly your friend's account got hacked? Was it exchanges fault or lack of security? I So here's a case. So when I heard his story, to me, it looks like a rogue employee on an exchange. And that would happen if you leave your coins on exchange. So he had, again, maybe we'll, in some session, if, let me just take a poll, or just a quick answer. How many of you actually own crypto? Because if many of you are actually owning any type of an asset, I don't care which one it is, you have to make sure that you secure it well. Right? Just login ID and password is not enough. What is someone you get a victim of a phishing attack? Even if the exchange is not hacked, but you become a victim of phishing attack, you give away your user ID and password, you're gone. So there is another layer. You add your Google Authenticator or Authy or another level of security. So if you've not done that, that's the minimum you should do, is to put another level of authentication. So, but those can also be hacked. There is a, through a concept of SIM swap. Someone can hijack your phone by either working with a rogue employee at your service provider, AT&T, Verizon, or maybe the provider, or maybe that hacker knows a lot more information about you, that he poses at you and changes the phone and hence bypass the secondary authentication. Possible. That's called SIM swap attack. Then there is a, even if you have the phone and then the user ID password and the secondary authentication enabled, what if the employee at exchange itself is rogue? They can go and change the phone in your account to some other phone and drain your account, because then they get the secondary notification or the on their phone. And I think that's what happened with my friend. He was, he hadn't looked into his account for many months, and when he logged in, he was like, what happened to my portfolio? And then he went to his profile, the number has been changed, and it becomes difficult. So that's where the custody is a problem. So there are ways to secure it. You move it off the exchanges. So if there is more interest, I can talk about the various level of security on assets. Yeah, it, in the end, it's your private key, Asif, very right. And if you lose your private key, that's the problem. It's like me losing a key to my a safe deposit box in a bank. And in this case, there is no one who's going to check your identity. Your key is your identity. Yeah, PayPal and Square, they don't give any private keys. So if your PayPal account get hacked, you could be done with your crypto also, because then anyone who has got an access to your PayPal account will get access to it. All right, that's all on the Coinbase. I don't think will have time to talk about NFTs. So I leave that for next week. The reason why I wanted to talk about NFTs is I saw a lot of movement in non-fungible tokens. So we haven't got spoken in details about non-fungible tokens. Kind of just touched it a few months ago, because that was just starting up and the DeFi was hot, but now NFT is becoming really hot. And I saw a lot of movement from business community. Christie, the auction house, has become the first auction house in the world to actually auction a digital NFT. That happened on Friday. So I thought, again, yesterday. So I thought, okay, let me now bring up whole NFT and share it with you guys, but I don't think we'll have time today. So I'll do that next week. I can push this, but this document is not shareable outside. So Maurice, this is my Google Drive. It's not the any external website. So this is the URL to my presentation, which I will go over next week. There will be a survey soon to do a scavenger hunt to coins which are unclaimed or forgot. We already know. I mean, if you look at the coin, look at the addresses from where have been no movement of coins, there could be a few reasons. Number one, the owner doesn't want to move it. Possible, Satoshi Nakamoto's address. Number two, little sad, owner is dead and no one else has a private key. Number three, they lost their private key. So we don't have to figure out a surveys. There are services which exist. They already know how much of the Bitcoin supply is actually in the. There was some guesstimate in terms of how much of this coin supply is actually something which will never be able to use it because people would have forgotten their keys or misplaced their keys. And unfortunately, there is no other way to get access to it without the key. And that's the beauty. You cannot just confiscate. So there was a joke around it about some German police. They caught a scammer who had scammed a few people, out of their coins, and then they put up on a tweet or somewhere in the media saying, "Hey, we caught hold of this. Now we got access to it. All we need is a key." And then the Twitter already exploded, saying, "What is it? You got access to it without a key? Not your keys. You don't have access to it. Plain and simple. So you have not progressed anywhere." So they say we got a hacker. We know what his address is. Now all we need is a key, which means you need everything. You haven't done anything just yet. And it works both ways. If anyone wants to confiscate, they can't. But if you forget, misplace, then even you can't. There is work happening to get around this. That's what we call multi-sig. Is instead of signed by just one key, you have it signed by, let's say, 6 keys. And then the logic determines that if 4 out of those 6, I'm just throwing an example, of 3 out of those 6 keys are put in together in a transaction, it will still go through it. So these are called multi-signatures and multi-sig transactions. So there are work around it, will happen. But I don't think, currently the Bitcoin which you and I get, those are multi-sig enabled. Many of these institution investors, let's say, I'm sure the Square, if Square is holding Bitcoin, they will be under multi-sig. What if they're holding Bitcoins on behalf of customers, a few $1 billion worth of Bitcoin? They won't let the key to one person. There's too much of a risk. So most of these institutions, they use multi-sig. They'll have 4 or 5, whatever number of a keys. And out of those, at any point of a time, 3 or 4 keys, whatever the number, need to be signed. When you're signing a transaction, all those 3 or number of keys need to be present. So if one of them loses the key, it's still okay. Others are still there. So there are solutions to it for institutional investors. And that is why now institutions are actually getting a little more comfortable with it. Need to find a cure for Parkinson's disease. Absolutely. If you can find a cure for Parkinson's disease, you don't need Bitcoin to be a billionaire. Can anyone break private key? Not yet. I mean, there have been thoughts around how quantum computing, but now there are quantum resistant cryptographic functions. So are they sensitive to MITM attack? I am thinking MITM is man in the middle attack. It is possible if you are, say, if you are transacting between you and an exchange, then anything who is snooping on your computer or it could be possible. So in some cases, for example, I actually liked when I looked at the ADA is when you're downloading a wallet from them, I haven't looked at another ones. They actually give you um, a way to verify that the wallet that you downloaded from them is actually the correct wallet and it's not been prone to MITM attack. They'll give you the checksum, and then you have to download some other utility to figure out and match the hash to make sure that when I'm going to download an wallet in which I'm going to store my private key is actually downloaded from the real source and is not being manipulated by man in the middle. So I would say the sensitive and the better companies who are building wallets will provide all these technological solutions to it. Otherwise, the other way is move it off the internet. If it is not in the internet on the internet, I don't think there is any technology yet which can read from my USB drive sitting in my table or in my safe deposit box. So there are ways. All right, let's move on. This could be a big topic in itself. So let's we got too much stuff to cover. We already kind of running out of time. Is want to look at the option trade reviews and then maybe a question. Let's let me take a few couple of minutes of break by asking this question. And if you have questions on the crypto side, please put in. Maybe I'll address it in the next session, uh, because this we could get into a rabbit hole as deep as we want to for many hours. Okay, something that came across me and that was interesting. What's the risk that we have to be aware of when we are buying a put? So generally, it's said that if you buy a put or a call, you cannot lose more money more than what you spent in buying a put. So my question to you, can you lose that? Is it true always? Or can you lose more money than what you spent in buying a put? Let's give an example. You bought a put on Tesla, say at $700. Is there a way and you spent $50 in buying that put? Sorry, whatever. You spent $50 in buying that put, you spent $5,000. You bought a put on Tesla at 700. Is there any way you could lose more money in your account? I see one response. Anyone else? Actually, I read about a user who lost more money because he didn't understand. He didn't understand how exactly the the whole exercise, etc. works. Chris, but time value, you're not going to lose more than 5,000 because it will anyway slowly degrade and it will become zero. It's not because of time value. So here's the whole background behind this. A user bought a put in a stock, and at an expiration, the stock was moving a little up and down, and he thought, fine, he didn't close his trade, and that's where the problem lies. So anytime when you hear that there is no risk, please always assume that you have to close the trade before expiration. At expiration, the things could flip in any direction, even if it goes in the money significantly or not. Even Chintan, so even if it goes in the money significantly, on expiration, if you don't take profits before expiration and close the trade, you could be subject to bigger losses. And this is what happened. I forgot what the stock was, but the trader had bought a put, it didn't close it. Stock was bouncing near its strike price, and it actually went slightly in the money. So when it went in the money, brokerage firms, they do what with this, what by law they actually do is auto exercise. So so brokerage exercised that put. He didn't have the shares. What the user thought was that the brokerage will buy the shares from the market, then exercise to put the shares to uh, at the strike price, and he will pocket the profit. So he had bought the put. Let's take an example of Tesla. He bought the put at Tesla at 700. Tesla becomes 650 immediately after market. He didn't close it, and it becomes 650. In his thought, trader thought that the broker would have will buy Tesla at 650 and then sell it at 700. So he'll make cool $5,000 per contract. But that's not how it works. So that the way it happens is broker is not going to buy the shares at 650 and sell it at 700. If the trader didn't have the shares, so his portfolio was short shares. So when on the next trading day, when logged into his profile, not a next trading day, after that, on Sunday, he'll he realized that is negative 100 of the shares. So now imagine you had sold those shares at 700. So you got 700 in, but you are negative those shares. Now on come Monday, those shares rise to 750. Now you're actually losing money, or 800, 850, you're losing money. Now if you have to close your short position. And God forbid, if you are in some of those meme stock, broker may not even want to hold this short stock position because it will be too difficult to borrow it from the market. If that stock would have been any HTB, so broker platform will show you which are hard to borrow, HTB. If the share that you dealt with was HTB, you were short shares, and shares go high, broker will immediately close that. Legally, they are allowed to. They'll buy it at whatever price it is in trading in the market. So if in the market it is trading at 800, 850, they'll buy back the share at 850 to close your short position. So where you thought that you cannot lose because you didn't close your position before expiration, there you go, you're losing $100 or $150. So be careful. Close your position. Take your profit or take your loss, or be very clear in understanding how the exercise assignment works. Unfortunately, that trader did not know about it. He thought he'll just get the difference, he'll just get the profit in his account, but no, he got short shares. And the next time when the market opened, those shares actually went high. Broker forcefully closed that, and instead of making money, it was actually lost money. Okay. All right, so let's look at some of the option trade reviews, and this will be the last part for today. Closed 9 trades overall. No loser yet, so which was fine. It's good. At least all those trades we closed. For the trades that we've been discussing in this meeting, last week we had 7 trades open. We had SLV, couple of GLDs, GDOT, GDXJ, XLB, and Fastly. Out of those, closed 1 trade, which is SLV. We had our March expiration trade, which was $24 short put. Last week, SLV jumped a little higher, 25.96. We are making good enough amount of a profit for March expiration, because now March is getting closer to expiration. It's what, around less than 20 days to expiration. So why wait? It was making money, so we closed it. So this was one of the trade that he closed it, and then we added 2 new trades. So the old GLD still have. So let's look at the GLD stuff. Again, GLD was beaten down last week. So I had a very tight RN condor on GLD, 174 short put, 175 short call, and then the wings. I laddered a trade on GLD because it fell down to 168. From 174 fell down to 168. I laddered another one. This is an iron fly, 168 short put, 168 short call. We recentered the trade. GLD fell down again. So I did one more, the third one, and the last ladder trade on 166. So let's look at GLD. And with this, now I exhaust all the maximum amount of risk I want to take in this ticker. So it was 174. This is where I did the first one. Fell down to 168. I did another one here. Fell down to 166. I did another one here. I didn't know that if go down another $4, I should have waited a little bit more. But anyway, past is past. You can change that. So I got 3 ladder trade on GLD, and I don't want to take more risk. So now if it continues to challenge, which it did, it's time to manage it. So what I did is a new trade I want to share is this one, in which I actually rolled down my short call from 175 to 169 because it continues to stay challenged. It's time to manage it. So I'm managing my first trade on GLD, which was this. I have a 175 call. So roll down that call from 175 to 169. Got additional 39 cents. So with this, I got $5 inverted. Remember, our option management inversion is when your call is lower than your put. My put was at 174. Now my call is at 169. So I'm $5 inverted. But the total premium taken is $6.56. So if by magic GLD goes back up again, and don't look at this because this doesn't take into account the profit I've already taken by rolling down. This is what Thinkorswim does or any other platform. So it doesn't take into account the amount of profit which I took when I closed the 175 call. So that I close it for pennies. But any case, if it comes back up, I'll still be able to make some money. Beyond that, that's the one management I did. I didn't touch any of the other trades just yet because if I take this particular trade out of equation, 169, 174, and 185. If I take that particular trade, the initial one which I manage out of equation, it is still within our break-even points. So if gold tries to get back up a little, we should still be okay. So remember, our first trade was when gold was at 175. And now it is way down at 162, but it's okay. My first one was, yes, I had 174 put, 175 call. Now what I've done is, let me go back and maybe show you that. GLD. Come on, load up. So I rolled back, rolled down, there's a 170, there we go. So these are all February one, March is this one. This was the first trade, 174, 175 put, 617 credit. Second ladder trade, 168. Third ladder trade was at 166. This is the first management trade in which I'm rolling down my 175 call by closing it for 20 cents. This is from this trade and opening 169 call. But these two trades I haven't touched yet. So I'll see how GLD behaves and we'll take a decision accordingly. If it goes a little back up, then we should be fine. So that's the story on GLD. All covered. All G dot, green dot. This is again my fintech play. We got a strangle at 50.65. So not doing anything just yet because it's not broken out a break even point just yet. It is making I mean, we still have some time. Our break even is 46.12. And hopefully with the stimulus passing the house, and if the inflation worries have been would little subside, if market see going up on Monday, all I need is to go to 50, it'll become, I'll close it. It'll be a decent profit target. So I'm holding and watching this really closely. GDXJ hasn't worked out because of the gold hasn't worked out. So this is below our break even. Now the question is why I did not manage it. I tried to get some premium, but there's not much of a premium in trying to roll this down. I mean, I could have rolled it down to 52, which is where the expected movement is, but I was getting like 3 cents, 4 cents as a premium. I'm like, not even worth it. No, why for 3 or 4 cents? Why roll it down all the way to 50 to 51? That's the reason why I didn't roll it down. So finally, maybe I will own GDXJ. It's the first time in last 10 trades that I might actually have to own it. But if it recovers, it's not that far away from our break-even point. It's $1.25. If it recovers, we'll probably close this as a profit. Still got some time, so I'm gonna wait and watch. If it stays low, I'll happily take assignment, and the eventual cost basis will be way less because we collected a lot more premium on GDXJ in multiple trades. This is the first time it is. I would say in every trade it has got challenged, but then would have recovered because I'm seeing this trend multiple times. It gets challenged and then recovers, get challenged, recovers. So I'm hopefully if it is now it's being challenged, if it comes back a little bit recover, we should be all good. But there was no premium in rolling it down. XLB, I should have closed XLB because it was making 30% off overall premium. I thought let it make at least 50%. Boom. Little did I know that the volatility will increase. The XLB hasn't fallen down too much. It's from where it was making 30%, but because the volatility increased in the market last week, it went against me. So from today, from making, it was making what, $150? From making $150 right now, the position is negative 381. But if vol decreases or if XLB goes higher, we should be good. Still, materials, ETF, commodities ETF, give me exposure. I want bullish exposure on commodity. So I'll be happy to hold it. Fastly, we had 75 call, 120 put. So that I rolled down. If I recall correctly. Yes, so 125 put, I roll it down to 95. So to make sure that my break even is, it is still within the break even point. Again, now we'll just wait for it to recover or wall to crush to close this at profit. The new one, another new one is Disney. So I opened a Disney covered call on 23rd because I hold long stock of Disney. So here I'm selling 20 delta call against a long stock position. It has some good run up in the past 2 days. That's why it hit a new all-time high on 23rd. So I sold a covered call against Disney on. So let's Let me take out my long position. So 210 covered call. I sold it when Disney had hit 206. Oh, no, I sold it when it hit. It was on 23rd. I did it right. It hit that time. All time new high was around 198 or something. So I sold a covered call. So far so good. It's okay. It's a cost basis is 125. So my covered call is at 210 and should be okay. If it gets called away, I shouldn't be cribbing a lot because I hold more than 100 shares. The rest of the shares will be there to ride it, if it continues to go high. But right now it's making some money. We'll wait for it to decay in value because I did the trade this week. It will take some time to decay in value before I close this trade. I think that's it for last time. Year to date summary, what we've been talking about. We total looked at 22 trades, 15 closed, 2,500 money for you to use. All right. Any other questions? Sorry, I didn't go through the various stocks today. There were so many other things to talk about. And I'll definitely cover NFT in next session. I have the content ready. So I'll talk about that in next session. That's I see a lot of interest happening in crypto economy on NFT. A lot of it is, I would say, could be a bubble, but it's get to know about those things so that we are positioned well when that bubble bursts and opportunity arises. Roblox, I already covered Roblox in my previous session, so there's nothing more to cover on Roblox. Only update on Roblox is they're going for direct listing on March 10th. Oh, there was some other question around covering some other stock. I might have to go back and look into the chat later. Some orange. Oh, God, I can't figure out. Let me go. Oh, Digital Ocean cloud company. Olo online ordering. Digital Ocean. Okay, never heard of. No, neither I've heard of Olo. I heard of a ride-hailing company, Ola, but Olo, online ordering is a competitor to Uber Eats or DoorDash. Okay, yeah. So pick. I'll look into one of these. Yeah, if there is something that you have on your radar, do let me know. Coinbase created a lot of interest, especially on the crypto economy, and I want to keep track of it. So I try to stay up to date on what's happening on that side. So I knew Coinbase is going, so I picked it up and brought it up. But I never heard of DigitalOcean and Olo, so will be good to look into those two as well. See, Ramesh, learn today to close your option trade. Yeah, and let me tell you, it many part of a time. Sometimes I just think, hey, it'll take me, why spend a couple of pennies in closing it? Let it go to expiration, let it expire worthless. But now, as and when I've heard about these stories, especially if I'm on individual stocks, I'm like, it's okay. I'll pay $4. Or I'll pay $4, but I don't want to have that tension. So yeah, close your trade, especially if you're dealing in individual company trades. We never know what might happen after hours. That's not in our hands. And this is not a crypto market that stays open 24/7. Unfortunately, there's nothing much we can do after 1 p.m. PST, 4 p.m. EST. But the company news can keep coming. So is it true for call option as well? So in a call option, it will be true as well. Yeah. So let's say if you had a, I'm just throwing a hypothetical example. You had a call option on Tesla at 700. and the Tesla stock is at 750 just on the last expiration day, a few minutes, and you are in a doubt whether you should close the trades and take profit or let it expire, your call get exercised. So now the way it will work when your call get exercised is 70,000 will move out of your account and you will get 100 shares of Tesla in your account. Come Monday, if the Tesla falls down, if it opens at 600, what do? You lost. You're holding a shares, 100 shares of Tesla that you bought at 700. Now Tesla is at 600. When these exercise or assignment happens, then you either get a stock or you become short stock. Whenever we have these stock positions, now it is dependent on what stock does. While market is closed, but the company is open. So that will be a risk on if you even if you hold call option. I hope I was able to put this in a good perspective. That so can you not tell your broker of your choice not to auto exercise? You have to call up your broker and tell them not to auto exercise. But then if you don't auto exercise, how are you gonna take the benefit? So taking an example of Tesla, you haven't closed your trade. You tell your broker not to auto exercise it. Then what happens? Your call is in the money. How are you gonna take a profits? Oh, you're talking of selling a call. Okay, in case of you sold a call, I see a question from Sudhir. In case of a covered call, there should not be a risk. Yes, because in that case, you're already holding a stock. So if you're selling a call which is covered by the stock, then your stock will get called away. Then that's okay. But here we are talking about someone who has just bought a call or bought a put, because generally the the conception or the thought in the market is if you buy a call, buy a put, you cannot lose more money than what you've invested in. Tell me if I'm wrong. But that's what people say. Hey, in when you buy a call or buy put, all what you can lose is what you've invested in. But what we need to add to it is an addendum. All you can lose what you've invested in if you close your trade before expiration. And that I think comes from experience. Or if you don't close your trade before expiration, we take an example of a put. We also taken an example of a call. There is a way you can lose more money than what you spent, what you would have anticipated. Again, not trying to scare anyone who is buying calls, but just be aware of if you let your trade go into expiration, funky things can happen. Even if you just bought a call or a put and you were told you can't lose more than what you've invested in. But that's only half truth. Okay. All right. Uh, I need to go to make lunch. What can happen even before expiration? Yes. Before expiration, you cannot lose more than what you have invested in if you have bought call or bought a put. If you have sold a call or a put, that's a different matter. That everyone knows that there is a more risk, but there's a more chance to succeed. So I like selling it because I understand the risk. Today, I only want to talk about is many people are being told buy call, buy put, risk is limited. But they forget to tell you close your trade before expiration. Till expiration, your risk is limited to the amount of money you have invested in. But if you let it go in expiration, you could end up losing way more than what you had spent in buying that call or put. That's the only thing I wanted to highlight today. All right. Well, thank you everyone for joining today. One last thing was we have got our next boot camp on Tuesday. We're going to talk about hedging techniques. on. I wish maybe we could have done this sooner, but I didn't know what the markets will do. So we stay to our course. We cover stuff on the particular sequence so that it is easy to understand. So next one, we're going to talk about risk hedging techniques. I'll talk about few of the techniques of how managing risk in a portfolio. And again, this is to be used for lifelong. So it doesn't matter if markets recover. Market will give more opportunity to manage our portfolio. Cool. All right. So I'll see some of you on Tuesday. Otherwise, I'll see the rest of you on next Saturday. You're welcome, Rasif. Welcome, Len. You have a great weekend as well, Chris. Welcome, Mohit.